So here I'll be presenting a paper titled Mobile Phones and Financial Inclusion in Sub Saharan Africa. The paper I am co-authoring it with Lucas Krusbowski and Valentin Linklecher. So as we know, mobile phones have been the most commonly used devices in the world. About 62% of the world population own a mobile phone. And in Africa, we have seen an exponential growth of mobile phones in Africa, especially between the period of 2005 and 2019. We have seen an exponential growth of mobile phones from about 12.5% in 2005 to around 80.1% in 2019. Mobile phones, apart from simply allowing people to communicate and access information, mobile phones actually help individuals to access information and also increase market efficiency. And they can actually stimulate economic growth, inclusive economic growth, by providing services that are in general not available to people in the bottom of the pyramid. Such as mobile-based financial services, internet, health, and agricultural services. Despite the importance of mobile phones, there are very few studies that have actually looked at how a mobile phone help in provision of services such as financial inclusion and reduction of poverty. For instance, some of those studies include that of ACA and Mbiti in 2010, who actually conducted a study in Kenya, and they conclude that mobile phones actually increase the propensity of people using formal saving mechanism than the informal saving mechanism. Other studies include that was conducted by Jack and Suri, and they find that mobile money services help people to actually subscribe to insurances, and in such case, it helps people to actually lower their risks in terms of lower the risks, as they will be able to insure their property and stuff. Other studies that have been done include that despite this, most of the studies which I've mentioned here have mostly focused on Kenya, which is one of the country that has was the first to innovate mobile money and actually has a lot of people who actually use mobile money. And other studies, we have few studies, or there are very few studies that has actually looked at how infrastructure or availability of infrastructure actually help in adoption or influences the adoption of mobile money. One of the study was conducted by Mothobi and Krusbowski in 2017, and here they used a survey data collected by Research ICT Africa, and combined that survey data with Nightlight's intensity data. And through that, they concluded that people who live in areas with poor infrastructure are more likely to use mobile money platforms than those who live in urban areas. So in this paper, therefore, we tried to contribute to this literature by analyzing the effect of infrastructure development on the use of mobile financial services. We differ with existing literature by using non-binary measures of infrastructure development and estimate how it influences adoption of mobile phones and smartphones, use of mobile money and remittances, use of mobile money wallets, and how to save money in their platform. So in order to do this, we combine three data sets, one from Research ICT Africa, a study which was conducted in 2017 by Research ICT Africa across 10 African countries, which are South Africa, Lesotho, Namibia, Nigeria, Ghana, Senegal, Swaziland, would be Ghana, Kenya, Mozambique, Nigeria, Rwanda, Senegal, South Africa, Tanzania, and Uganda. So interestingly, this study conducted information about individual characteristics, household characteristics, and also have a very interesting variable, which is the geocoordinate variable, and of geocoordinate, which kind of got information about the exact location of each household that was surveyed across all the countries. And therefore, we use this variable to actually complement the survey data with information or data which were Nightlight data collected by satellites. Yes, and then we also use other data, which gives the geographical locations of ATMs, banks, and roads across all African countries. So through the use of geodata, which is the longitude and the these variables, were able to map each households on this infrastructure variables. So from the survey, we find that there is differences across country in terms of ownership of mobile phones and smartphones. For instance, we see that South Africa here would have 86% of people who have mobile phones and about 44 people using smartphone. What we see here is an evidence of how development actually leads to adoption of mobile phone, in the sense that countries which are generally or are relatively richer than other countries within the African countries tend to have more mobile phone adoption than those with which are relatively poor. The same is also seen in smartphone adoption. For instance, here, as I've already mentioned, South Africa, which is one of the among the richest countries in Africa, tend to have a high, or more developed country in Africa tend to have high mobile smartphone adoption than Uganda and Ghana, which are relatively lower when compared in terms of GDP per capita and stuff. Similarly, we also look or analyze to see how adoption of mobile money across countries. But interestingly here, we see that countries such as South Africa, which are more developed, tend to have low usage of mobile money than those countries with which are poor, which somehow show that mobile money is mostly used in countries that are poorer than those countries which have developed infrastructure. So the graph there shows the mobile phone adoption between 2011 and 2017. As I've already said, we have seen over the past 10 years or 20 years or so, we have seen an increase in adoption of mobile phones. For instance, here we see that in Ghana, there have been a slight increase there, in Kenya, a high increase in adoption of mobile phone, but we see that South Africa kind of reached saturation earlier. The adoption of mobile phone between 2011 and 2017 was not that much. There was no great difference between 2011 and 2017. However, we see that in 2011 and 2017 in Kenya, mobile money usage was almost reaching saturation, seeing a very slight increase in mobile money adoption. While in other countries, we see that there is some kind of a trend of increasing usage and a high increase in Ghana. This is mostly because of different policies that have been implemented. For instance, we know that previously in some countries, people were not allowed to kind of have a mobile money account until they have a bank account. But as time goes on, as policymakers tend to see the importance of mobile money usage, they then kind of reduce the restrictions of mobile money usage, and therefore we kind of see an increase in mobile money usage across the different countries. Here we show it's a photo showing the distribution of countries that have been surveyed by Research ICT Africa, and there we show how households are distributed across the surveyed countries. It's just a snapshot of what how the data looks like, and here would be the network of the network of roads, ATMs, and bus stations across all the countries that we surveyed. This one would be showing the nightlight intensity, which is one of the variables of our interest. And here we see that countries which are probably developed countries tend to have high light intensity. We see South Africa there seems to be more lighter than other countries. There seem to be more light in South Africa as compared to other countries in Botswana, then Namibia, which are relatively not so well developed as South Africa. We also see that Ghana there and Nigeria are closely lit as compared to South Africa, but they are not as lit as South Africa, which actually shows that the infrastructure, the nightlight intensity data is actually a very good variable to use. A very good variable to use to proxy for infrastructure development across countries. And within countries there, we show South Africa there, where we show a number of cities there. We have Gauteng, we have Durban, we have Elizabeth, and we have Cape Town. And we see that there seem to be more happening in Gauteng than the rest of other areas. Gauteng seems to be more lit, and that shows there is more development and more activities in Gauteng than Durban, Elizabeth, and Port. But the same would be more lit than others. This same thing is also observed when you look at it across continents, with Africa being more darker, being darker than the rest of other continents. So in order to actually to do our objective, which is to actually look at how infrastructure influences the adoption of mobile money services, we take into consideration that one cannot actually access mobile money while they do not have a mobile phone. And therefore, to do so, we have to take into consideration of sample selection bias. And we use a Heckman sample selection bias procedure, where we have in the first stage, we kind of run a mobile money adoption, mobile phone adoption, where we include a number of covariates, such as infrastructure variables, such as the distance from ATM, the light intensity, distance from network roads and town. So we also include other variables, such as individual and characteristic variable. But however, in order to be able to, we have to take, in the second stage, we have to take we have to exclude some variables which we kind of believe that they would be important in the adoption of mobile money, but not so important in the adoption of mobile, in the adoption of mobile phones, but not important in the adoption of mobile money. So we exclude here electricity and fixed line, mostly because we believe that electricity would be important in the adoption of mobile phone, but would not necessarily be important. Once someone has actually adopted a mobile phone, then an electricity issue does not become an issue in the mobile money thing. But also the fixed line issue is not so relevant in in adoption of mobile money. So this helps in in the process of doing the inverse Mills ratio, which is used in the second stage regression. So our results, the first result shows that we ran a number of regressions there. The first one, we have nightlight intensity, but however, we tend to find out that the nightlight intensity have a lot of zeros, which actually shows that in some areas, the light during the time of collecting this information was not so stable, or the light was very, very low at a 0. And therefore here we make a dummy variable, or we generate a dummy variable, which captures for the darkness, either dark or not. And then we also have another variable there, which is a continuous variable of nightlight intensity. And what we find out is that, so we also use a number of infrastructure variable here to actually test whether our results are robust or not, which include bank distance, bus distance, and road distance. So what we find on which is also robust across all the regressions or the model is that in areas where, in dark areas, the use of mobile money is very low. The use of mobile money is very low as compared to areas that have some kind of light. However, the nightlight intensity variable remains insignificant across all regression, and it's robust and significant across all the regression. But we also look at one of the interesting variable that we wanted to assess is the bank account ownership, and we find that people who have a bank account are more likely to use mobile money than those who without mobile money, which actually this for me kind of says a lot, in the sense that it says that for people who have a mobile bank account, mobile money seems to be a complementary for those who are able to access informal banking services. But however, it is rather a complement, a substitute to those with no mobile banking, informal banking at all. So secondly, we test, or we run regressions on the usage of mobile money. Here we look at how people send or receive money. Here this is not a dummy variable, but we are looking at transactions, the amount of transactions that are carried on, or that are sent by individuals, or received by individuals, or saved by individuals on their mobile money. So we kind of use a 2-bit model, and we find that people who live in areas with poor infrastructure or with low light intensity tend to use mobile money than those who live in more urbanized areas. And similarly, we find that for those who live in darker areas, send less money on their mobile money than those who live in urban areas. So secondly, we also run a regression or model on receiving, that is the amount that is being received by individuals on their mobile money platform. And we find similar that those who live in like poor areas tend to receive more on their mobile money platforms. Interestingly, one look at or assesses the magnitude of the each variable, we find that people who live in a more poor in areas with poor infrastructure tend to receive more on their mobile money wallet than those who live in urbanized areas. And lastly, we we look at the savings, how much people do save in their mobile money wallet, and we find that people who live in poor areas tend to save more, or people who live in areas that have low light intensity tend to save more on their mobile money wallet than those who live in urbanized areas. So interestingly, our results kind of show how the importance of mobile money in financial inclusion. And it shows that people who do not have access to the informal financial services kind of use mobile money as a storage, like to save their money. And therefore, this also collaborate with the findings of Jack and Suri, who find that the use of mobile money tends to kind of increase the propensity of people using formal banking services than informal saving services. So to summarize, our results suggest that individuals who live in areas with better infrastructure are more likely to adopt mobile phones and smartphones than those who reside in areas with relatively poor infrastructure. But among those who access mobile phones, we do not find any, we find that mobile money does not depend on distance to facilities such as ATM, bank, buses, stop, and roads. However, we find that people who live in areas that or households that are less lit areas tend to send, receive, and save more on their mobile money wallets than those who live in urbanized areas. Thank you.
Thank you very much, Onko, for the presentation. There's lots of time for questions. You were very fast. You had 45 minutes. We're done in 25, basically. So if there are any questions, please feel free to ask.
Could I ask a question?
Yes, please go ahead.
I'm somewhat surprised that we don't see the importance or the lack of importance of networks. And as we know, in Africa, the networks are primarily concentrated in the urban areas. That would probably correlate with the lighting. So I would like to hear comments on this relation between these variables. Thank you.
Do you want to answer, Onko?
Yes, I think we kind of share the same concern with you, but this is more like working in progress, and this was more like our first take to, or our first. We are still at a very, I don't know how to say that. So yes, we are concerned about the lack of importance of infrastructure. Like you are saying, light intensity would be correlated with infrastructure development. But when we thought about this, we kind of looking at from a different perspective. First, we have distance to the city, which would be covering infrastructure availability across regions. And then the light intensity would be more focused on infrastructure within a particular area. And that is why we kind of included both, or we thought of both in the regression.
If I can comment on this, and it's also maybe a question with respect to the data on nighttime light intensity. So clearly, this data may not be very precise, right? And do you have any knowledge about how it was used in other studies and how they dealt with the potential problem of imprecision of nighttime approximating infrastructure?
That me.
Yes.
Okay. Yes, the data was kind of used in a number of studies, but this paper would be probably the first kind of paper to use it at individual level data. Most studies tend to use it at aggregate level by comparing the availability of infrastructure and economic growth. And the first paper tend to look at how availability of infrastructure, the nightlights in general, the nightlights correlate with GDP. And this is how there was the first papers to do so. So I'm not aware of any papers that have tend to use it in terms of at individual level, kind of the way we do it.
So you mean that the other studies would look like at the country or at some more sub-geographic level, but not really at the geolocation of individuals like here?
Yes, they would look at country level and more like economic growth and light intensity at country level.
So in relation to the question again, so I guess there's more and more data which is available on a very detailed geographic level with respect to access to different kinds of infrastructure, right? Because there's lots of satellites that are taking pictures and that enable to code what is observed into information, to what extent different households live in proximity of different infrastructure. I'm not sure about the details of the other database which is used, like ATMs, banks, and so on. Is it very precise? Do you know something more about this? I'm sorry for asking tough question.
Yes, the data which we're using from ATMs, it's more like we assume that it's precise in the sense that one would believe that it has been calculated, it has been collected using a number of platforms that uses coordinates and stuff, satellites and all that. So it's more like similar data to the one that we're using on Nightlight. So I think this one is more based on open source data. So, but it's something that we can check on it, whether it's really something that we can go with or
not. So, could I comment on the question regarding Nightlight and other measures being used in the literature? I'm aware of some studies that have used Nightlight for as an indicator of GDP concentration. So it could be used in terms of the dispersal of wealth. Mm-hmm. And that is how it has been used in other studies.
Yes.
Right. Are there any other questions?
Yes. Hi, Lucas. Hi, everybody. Hello.
Hello. Yes, please go ahead.
Yes. This is Romele. I think I have some few takes here. The first is I think on the issue of Nightlight's data. Please try to get the lowest level of resolution, where like, so that we can get exactly like the area that is covered per each coordinate. I mean, like, because that is not as granular as you would want. So you would want to have an understanding of, in each country, how many data points probably you will have, because that will affect your the extent of variation. The second take is that I think, or suggestion is that I think you have a lot of data here, which I think you have actually not given us much in terms of explaining descriptively, or showing us some descriptive analysis between mobile phone adoption and those variables that you consider to be of interest in this particular instance. I think just before you go into the regression analysis, I think I would like to see more evidence, graphical evidence of, or anyhow you place it, but that those descriptives that show us, that drive us to the regression analysis, that show us those strong relationships even before you do all these gymnastics of the Heckman. And the last small take is simply that please consider on your descriptives, I think it's on the bar charts, where you are showing the differences between mobile phone adoption, and because sometimes it's very difficult to see whether there is a real increase or what. So if you could put the standard, I mean the confidence intervals over those bar charts, so that we can have a sense of whether there's been an increase or there hasn't been any increase, because the difference in terms of the height of those bars could be small, but statistically that could be much. So I think you can consider that. Thank you.
Thank you. Thank you very much for your points.
There's a hand raised by Jacob Twala. If you want to ask a question, please unmute yourself. Jacob, do you want to ask a question? I guess, all right, he's not able to unmute. I have some more questions before anybody else asks, so actually criticism. So one is related to what was just discussed about the data. So on one hand, I think you need to provide much more information about where the data comes from, the infrastructure data, I mean, and more information about other studies that have been using this type of information on geographic level, both infrastructure and nighttime, as was suggested. I also have other questions. So it was, you went through this very fast and wasn't really clear. Some countries like South Africa and Nigeria, they have very low usage of mobile money. And you explained this by saying that there are some regulations in place. At the same time, as it shows on the graph, in Ghana, there was a big increase in the usage of mobile money over time. So I think it's worth to discuss in more detail specific cases to understand what is happening and why it doesn't take up in South Africa and Nigeria, why it takes up in Ghana. So I think it's yeah, it's somewhat interesting that why some countries have this kind of regulation that you have to have bank account. So it would be appreciated if you could provide more content on specific regulations in place. And then with respect to the nighttime data, so you don't show all the variables in the regressions because there's no space, but one of the variables you also mentioned is access to electricity. So one way to verify maybe the nighttime data, whether it's accurate, is to do some statistics with respect to people who declared having access to electricity, whether they actually live in the nighttime areas which are bright, and if they don't have access to electricity, they should be living in areas which are dark. So I think it would be a kind of nice test to compare some statistics with respect to what people declare that they have access to, and whether the information from other source shows that there's dark areas or there's light.
Okay. Yes.
So I don't know whether you want to answer something or.
Will definitely improve the paper by adding some statistics such as nightlight time and electricity. And I think it is also a good suggestion. The information on where data comes from, I think I would say the Nightlight data comes from the satellite kind of information data, which is collected by NOAA. I'm trying to, and then yeah, so we will try to update that in the paper.
With respect to regulations, which you mentioned?
Yes. For instance, there have been a number of regulatory policies with among different countries in Africa. For instance, as we all know, in Kenya, there's the subscription or to mobile money. You just have to have a phone, and then you kind of be able to connect to register for a mobile money account. But in countries like Nigeria, there have been some regulatory issues which requires one to actually have a bank account before they can have a mobile money account. And this kind of somehow restricted the use of mobile money in Nigeria. But however, in 2019, the country kind of looked at or assessed the regulatory measures and dropped some to actually allow mobile money to be used just used as you have a mobile money account.
Right.
So
with
something that we'll definitely discuss in the paper.
With respect, I have a related question, which might be important here. So for instance, it may be that the usage of mobile money in some countries is lower or higher because it's driven by some supply side factors, meaning that, for instance, banks are very strong in South Africa. So they may have incentives to maybe even lobby the government or do whatever actions to stop spread of mobile money because it takes customers away from them. So in a way that they compete with mobile operators who are able to launch sort of substitutes to their services. And in other countries, maybe it's not the case. So it's also a question from my side, whether the supply factors are important and to what extent the demand factors are important so that people actually don't take up services which are available in some countries, and in others they become more attractive, maybe also because they don't have substitutes, but also other reasons. So I think it would be interesting if you could provide some context.
Yes, like you are saying, one of the issues that could lead to low mobile money usage in some countries, for instance, in South Africa, would be the I think the high development of the financial sector within the country. For instance, in the survey, we find that almost majority of South Africans tend to have a bank account, and therefore it can either be both from the demand side to say, if you have a a bank account, why would you want to complement it with a mobile money account? But then again, like you're saying, there would be other issues in terms of the sector itself or operators within the sector, in the sense that due to some competition issues and stuff, they might, use their strength to actually stifle the use of mobile money. For instance, we know that in South Africa, there was a time when mobile money was kind of introduced. I'm not so sure about the dates, but after some time, they have to close shop because the take-up of mobile money was very low, and the competition from banking sector was very high in the sense that they developed similar products to what mobile money offers. For instance, mobile banking services, some of which would not require one to have internet, and therefore it would be easier to transact using a mobile banking platform than getting a mobile money account. And that was more like a direct competition to mobile money platform which was coming up. And when banks introduced that mobile banking app, then somehow they kind of stifled the development of mobile money in South Africa.
Thanks. Are there any other questions?
Yes, could I just elaborate on this problem? An important reason why Kenya features so prominently in mobile money is the highly sophisticated payment platforms that are in use there. If you compare that with South Africa, we haven't got those sophisticated platforms for mobile money, but we have more sophisticated banks, and coupled with that is also high internet usage. If you have that combination, banks are very effective and relatively cheap in doing money transfers. So I think you have to keep that in mind as well. And going forward, I think that from the development stage that we have presently in Africa in terms of mobile money, if you want to take that to the next step, it will have to be coupled with bank support. Otherwise, you won't be able to bring it to the next level. Thank you.
Yes, that's very true. I think, like you are saying, the payment platforms, in terms of their sophistication, is one of the issues that kind of allow for mobile money transactions to develop. And any other platforms that could be used. For instance, in South Africa, one could ask why that a lot of people are not taking mobile money apps. But we know that in South Africa, there will be an app which will probably be used by those, not app, another, yes, of course, services which can be used by those who do not actually have mobile, to say formal banking services, which would be the money transfers through ShopRite and all that. So these are some of the challenges that mobile money platforms tend to face when they get an account. But it's still a very interesting one to see, but why would people not take up mobile money if they are not financially included? I mean, in South Africa, more than 50% are financially excluded. And like you are saying, the development in terms of mobile money in other countries is mostly facilitated by what we sometimes tend to say the interoperability of services, whether one is able to pay from mobile money and any other account. And we have seen that more developed in Kenya, where you can pay and you can pay for for your travel services, like if you are traveling, you can pay for your flight using a mobile money platform. You can pay for all other bills, a lot of bills using your mobile money platforms. But in other countries, the usage of mobile money kind of been stifled in the sense that it's more like become more a transactional services, paying someone and receiving and kind of saving your money, while it does not allow you to kind of do other things like paying for insurance, water bills and stuff.
So if there are no other questions, I'd like to ask one more question in relation to, there's this hand raised by Ramaela.
Okay. Yes. Yeah. I think. Could you please go to your? I think the regressions somewhere where. If you can expand it, please. I think just something like. Yeah. Yeah. I think. Where you have the regression, there's some regression out. Yes, yes, even these ones. So what I'm trying to figure out is exactly like you see, you have a variable, a dark dummy, a dummy variable dark.
Yes.
And I remember you said one of the variables that is included in the mobile phone adoption, but not included in the mobile money adoption, is whether or not an individual has electricity.
Yes.
So I'm trying to figure out, I mean, like, what is the correlation between what more does this dark dummy capture that is not captured by electricity, having electricity? Could it be that some people have electricity, but they are living in dark areas? In which sense it would mean that actually they don't have electricity, because it's like it proxies the same thing, but at least in a much at a larger geographical area, and you are including it in the mobile phone adoption regression. Could you please explain that? Thank you.
Yes, I think like you are saying, one of the things that I think we should try to get from what we're trying to do here is that the nightlight intensity tends to measure the, the amount of activities or activity within a particular area, right? And we argue that when you have a lot of activities, you would tend to have higher lights in more light intensity. And when you look at the electricity variable, it just measures whether one has electricity or not. So it does not necessarily give us the amount of activities that happen without a particular area. And the way the nightlight data is being collected, as we argue that there are a lot of zeros here, which therefore means that that light is not stable. Like if we can remember, well, this kind of thing happened in the night, and you would probably have industry lights running all over the night, but individual lights, there's a point where you switch it off. So I don't know if that makes sense, but this is one of the things that I think make some access, whether someone has electricity and the night lights a bit different. But I hear your point and we will consider and look into it.
I also have a question and comment. So on this, so obviously the results are preliminary. It's work in progress. So you will certainly explain it better and take into account some of the comments. So here, the dark dummy means that there is no light whatsoever in these locations, and people who live in those locations they tend to have less cell phones, and they tend to use less mobile money. And then when there is some light, then the usage of of cell phones is also lower. The more light there is, actually, because there's negative coefficient. which means
Yes.
that the more light there is, the less cell phone are being used. So suggesting that, right, like bigger cities with lots of light, they actually have lower usage of cell phones than some smaller towns with less light in the night. And with respect to mobile money, this is not significant. So the use of mobile money conditional on having cell phones is not impacted on where people live, except that it's also lower in places in which there's no light at all, right?
Yes.
And then in the next slide, you have sending and receiving. And this kind of says the same, that in cities in which there's, in places which are dark, there is much less activity in terms of sending and receiving money. But once there is some light, so those with like bigger towns probably, they will tend to have relatively less activity in sending or receiving money than smaller towns, which are a bit darker. So I wonder whether you could come up with some conclusions on the impact of infrastructure on mobile money, on transfers between different areas, and especially like poorer areas versus richer areas. Maybe you should produce also some statistics before running the regressions to make some points with that respect.
Yes. Of course, what we kind of see here would be that we kind of see a transfer from, or like people living in urban areas kind of transferring more, a lot of money to those people who live in rural areas. So it's one of the things that we kind of see here. And other than mobile money helping individuals to kind of be financially included, we see that it also helps people to kind of remit money from urban areas to rural areas, and this therefore can kind of somehow kind of lead to some bit of increase in economic growth in those in the rural areas, in the sense that if it becomes easy to transact between urban and rural areas, and therefore we kind of likely to have some kind of increased activities or economic activity happening in rural areas. Yes, this is more like preliminary work, and I believe there's still a lot to be done. That will definitely improve this paper, and I think most of the comments that have been said here are very important, and I will definitely take them into consideration to kind of improve the paper.
Thank you very much. That's all from my side. Yes.
Could I ask another question?
Yes, please go ahead. We still have 5 minutes, actually.
Yes. You haven't mentioned the importance of the presence of spectrum. Many African countries are running on G3. So part of the problem of the low usage of cell phones for mobile money is the lack of quality spectrum. And I would like you to comment on that, because you didn't address that.
Yes, I think that's a very interesting question. So the first thing would be coverage and spectrum. And once we look at issues of spectrum, I think, interestingly, once you can communicate and once you can get a network, whether it's a 2G or 3G, you are more likely to be able to send money through mobile money, because mobile money does not necessarily require one to have internet to actually make the transaction. So I'm not so sure whether the quality of spectrum would be an issue here, unless if we are to say you do not have coverage at all. But I believe once you are connected, whether you are on whatever network technology, you would be able to transact. And I don't really see unless if I'm lost, but I think I don't really see that effect of quality of spectrum in mobile money transactions. But I agree that a coverage would be an issue, and but there are a lot of ways that people tend to deal with coverage issues nowadays. I mean, through moving around.
If I can comment on this, so there's information about proximity of different towers like LTE.
Oh yeah, yeah.
And others, so that can be used actually as one of the variables to explain adoption of cell phones.
Cell phones, yes. But that would be for mobile money, but for cell phones.
We are about to finish. Are there any final questions or comments? If not, thank you very much, everybody, for participating. The next seminar will be at the same time with presentation by Alison Gilward from ICT Research Africa. She will talk about new digital deal for South Africa, addressing digital inequality for post-COVID economic and social reconstruction. So we're looking forward to see you next week at the same time.
Thank you.
Otherwise, please visit also ERSA website for other seminars that take place on a regular basis.
Thank you very much.
Okay, thank you. Bye-bye.
Bye.
Thank you.
Bye.